Hello, welcome to European Open Briefing for Monday, January the 21st. I'm Rafi Barajan, currency analyst at xm.com, and we're going to be having a look at what's happening in the currency markets today. So Chinese GDP numbers are the main focus this morning. Chinese growth slowed to the weakest since 1990 for the full year of 2018, but the figures were in line with expectations, so we didn't see much reaction in the markets, and as a result, the improved risk appetite we saw last week is continuing at the start of this week. We can see Asian equities closing higher, though we do have slightly weaker open in Europe. US markets will be closed today for Martin Luther King Day. The dollar at the moment is trading close to Friday's 2-week highs. The focus for the rest of the week will probably, and until next week, will remain on US-Chinese trade talks when we've got more talks coming up on January 30th, 31st. Immediate focus today, though, will be on Brexit. Theresa May will outline her plan B later today. At the moment, sterling is marginally lower against the dollar. Euro, though, is edging upwards. And another notable mover this morning is oil prices. On Friday, we had OPEC outlining its production cuts, and also Chinese data showed that demand for oil was strong in 2018 despite the slowdown. So that boosted WTI futures to fresh highs for 2019. Taking a closer look at the dollar, we can see the dollar index here, not far off from Friday's 2-week high. Dollar yen also trading near 2-week highs, approaching the 110 level. We do have some worries about the US government shutdown, which at the moment there's still no sign of that ending, and that could potentially weigh on GDP growth. But the focus today, though, has been on the Chinese GDP numbers. We saw the fourth quarter growth, the weakest in 10 years. But there is optimism regarding the trade talks. The Chinese vice premier will travel to the US next week for more talks. There wasn't much reaction from the Australian dollar, which is very sensitive usually to Chinese numbers. We can see the Aussie just only marginally higher this morning at 0.7167. Oil prices, though, got boosted from the Chinese data, which showed Chinese demand is still strong despite the slowdown. We saw WTI and Brent futures climbing to 1.5-month highs, and there had already been a boost on Friday from OPEC showing that outlining rather its detailed numbers on how the production cuts will be distributed, so that somewhat underlines OPEC's commitment to the production cuts, so that boosted prices. And a quick look now at European currencies. The euro still struggling, although it has managed to edge above last week's lows. But the focus this week will be on the ECB meeting on Thursday, so we're unlikely to see any significant moves in the euro ahead of that, and Mario Draghi is expected to be relatively dovish at that meeting. Sterling, though, we can see has retreated quite a bit from Thursday's 2-month high. There was a bit of profit taking happening there, but later today, Theresa May will be unveiling her plan B. Not many changes are expected from the original deal she presented to Parliament, which was overwhelmingly voted down. But MPs will have a week to table their amendments, and those amendments could include a second referendum as well as blocking a no deal. Either of those options could potentially lift sterling further, and MPs will get to vote on the amended deal to the Plan B on January the 29th. That's it from me. Thank you very much for watching, and have a great day.